So hello and welcome back guys to the channel. And on today's video guys, I'm mainly going to be talking about Euro USD. Now, for the last couple of months we have been very bearish on this pair. Me and my guys in the mentorship, we have been able to catch a lot of moves within this area here over the last couple of months, since we had been overall bearish on EU ever since this break here. We have been overall bearish, and this was like October of 2021, meaning that was near the end of last year. So we have been very bearish, and we're still bearish on Euro USD so far. Now, a lot of people think that analyzing a pair is something very complex, but the overall analysis of the pair starts with market structure. Now, market structure is something very crucial that most of people think that they know. Well, in general, they don't know, right? In my own understanding, I use three main theories in market structure analysis, right? I use the Dow theory, the Elliott wave theory, and the Wyckoff theory. Now, these are theories that have been in the industry for hundreds of years, guys. They have been in this forex aspect for a very long period of time, and lo and behold, these things don't change, right? The market is still the same and will obviously going to be the same. I've had a lot of people talking that, market structure, some things get outdated, the COVID-19 and some shit, but it is what it is, right? It's just the perception of people with less understanding about how the market operates, and etc. etc. Now, I basically wanted to be talking about these three theories on how we've used them, how we have applied them to to this bearish sentiment of Euro USD, right? So let me write them down, because just speaking might confuse some people. So we do have the Dow theory, right? And then the Elliott wave theory, and then the Wyckoff theory, right? So this is like basically last Wyckoff theory, right? Boom. So these are the three main theories that I myself have used them to study market structure. Now, if you do not know what these things are, listen very closely and perhaps you get a thing or two, right? So firstly, so most of people know that market structure moves like this, right? If like a series of high highs and high lows, right? So at the end, at the far side end, we do have the realistic side of market structure, where price will tend to go like maybe like bearish, bullish, and then shift bearish for a while, and then continue bullish, something like this, right? This is how price moves realistically. Now, this right here is the okay. So boom, right? So this is the difference between the understanding level, right? This right here is Dow theory, and okay, don't know why this keeps bugging. This right here is Dow theory, right? Because let's hide this for this right here is Dow theory, right? Dow theory suggested that if prices, if a market is pushing towards a certain trend, it's more likely, more often than not, that price will maintain that trend. Now, on the other end, the Elliott wave theory stepped into the market to improve or further touch those areas that the Dow theory didn't, right? Because the Elliott wave theory suggested that I'm not going to be doing this precise, exactly, but it's just an idea, general concept, right? So you have a series of structure pushing 1, 2, 3, 4, 5, and then you now have the A, B, C, right? And then you have the 1, 2, 3, 4, 5, and then the A, B, C, right? And then the continuation of that in its own perspective. Now, lo and behold, the Elliott wave theory came to be more accepted and more legit than the Dow theory, because it touched a lot of areas that a lot of traders were confused, right? Because if you do follow order flow, the Dow theory is right, although it's not like mentioned or something. If prices pushing towards a certain trend, it's more likely to hold that trend, and you can see that trend is being held, right? You have a series of higher lows and high highs being put into place. This is exactly the Dow theory, right? There's nothing wrong about this theory so far, right? Because it's the same shit. But a lot of people get to be confused in these areas, right? So you do have a trend pushing bullish, right? And if a trend is pushing bullish, some people just wants it to keep pushing bullish like this, right? Breaking structure and making these retests, breaking structure and making the retest, right? But price in reality doesn't move like that. There's more often than not, there are going to be smart money moves that, you know, that are put into place to grab that certain liquidity. For example, right here, right, price is pushing bullish, right? So you have a series of highs and lows being put into place, right? And then now you have this pullback that kind of makes this liquidity here. Then price goes up and then takes this liquidity, right? This liquidity is taken, and obviously this is taken, right? But this is still held, right? So boom, you now, most of people in here are now anticipating that, okay, like this is a change of character, right? So they're going to any demand zone that they can find in here, I mean supply zone in this instance, to sell off of this area because they believe that price is now what? Pushing bearish. Well, this is false, because they're not taking into consideration the Elliott wave theory that price moves in a fractal nature that, you know, cannot be predicted without in-depth understanding of that theory or market structure in general. Now, lo and behold, all these people who are looking to sell off of this area are now what? Liquidated, right? So this is like what now? Buy stop liquidity being taken, right? People call it that, or some share, right? And then we have now the test and then the breaks, right? The test, the breaks, the test, price goes, you know, like fix that, creates this SMS, people call it short market structure. Lo and behold, there's a break. People are already jumping in, right? People are already jumping in. They're not seeing the bigger picture of highs and lows being put into place, right? They're now just jumping into conclusions that, okay, lo and behold, boom, we have the break here. We have the break here. We're now what? Waiting for a retest, right? So this is just jumping in. People wait for the retest. They sell off hard here. Price just comes down a little bit and takes them off, and then they start jumping to forex is a scam and a bunch of charade that's unreal, right? So with that being said, let's go back to the charts and see what EU was doing over the last couple of months. Now, we did have this bigger picture of Euro USD pushing bullish, right? Because we had that low, that high, and then this low, right? This low here, and then this high, right? This failure right here to break structure. Excuse my drawings, they're not really intact, but you know, it is really, right? Okay, so boom, so we have that failure of price, you know, to create a high, and instead price creates a lower high. Lo and behold, price goes down and breaks structure, right? Boom, so we do now have this breaker structure. Now with this breaker structure, we go back in to the intermediary trend, right? So now we have a high, I mean a low, a high, right? Okay, so this high is like there, a low, a high, a break of this low, forming this low, and then that high, right? This high which doesn't come to take out this high, meaning that the trend is being held. Lo and behold, you do have your entries in there, and then lo and behold, you do have the break of this low to form this, right? And then this, right? Good. So as you can see, guys, we're now just following these main or crucial points in structure, and we're saying that they're being held, right? So you have this low, price makes this high, and then so price makes that high. Lo and behold, now you have what? You have this high, I mean low being put into place, right? So you have this low being put into place, breaking this low here, right? Boom. So lo and behold, you do have your pullback, which is this high that doesn't take out this high. Lo and behold, you do have the break of this, forming this low, right? So from this low, let me show you guys now how people get confused, right? So we have a high, an overall high, and an overall low, right? And then we have this intermediary price action, because everything in between here, from this high to this low, everything in between here is intermediary price action. It's inconsiderable in this particular time frame. So lo and behold, we do know that all this move is just going to make a pullback. But the minute dumb traders see this, they're like, okay, so let's delete that. Let's use like the trend line or something. Yeah, boom, right? So the minute dumb traders see this, they're like, okay, price is now breaking structure. It's going bullish. Lo and behold, they do come and get this bullish entry here off of this retest. So they have their bullish entry here, and they're looking, once they get their entry, they're now looking at the bigger target. Like, okay, where is my bigger target? Because they want that money, right? They come and put that, like, the take profits here. They wanna collect everything they can from this to this, right? So this is like their stop loss, that's the entry, this is their stop loss, and this is their take profit, right? Lo and behold, price just comes up breaks this high, and then they're like, oh, price is breaking another high. So it's a trend confirmation, right? Because we do know that in the Dow theory, he did state that if price breaks structure twice, then that trend is likely to have changed and likely to be held, right? So boom, right? So after this break, they're like, okay, we're buying it, baby, we're buying it. Lo and behold, they're liquidated, they're taken out, and they don't understand what just happened. But in truth, they didn't see the bigger picture before everything started. So this is one of the mistakes that most of retail, or I can say dumb smart money, or like beginner traders who don't have that in-depth level of knowledge make, right? This mistake is made by a lot of people. The same thing happens in here, right? If we do look at the bigger picture, we do have this high and then this low. Now everything in here, right? Everything in here is intermediary price action, right? Everything in here is intermediary price action, unless of course we see the break of this low or the break of this high. Lo and behold, price comes and breaks this intermediary trend. People go crazy with it, and then we're bullish. We're bullish, baby, we're bullish. So what they do is take entries here, maybe here, like yeah, off of this supply. People have their entries there. They have their stop losses above these lows or just below that. So what price does, just comes, takes them out, takes them out, takes them out and out and out and out, and then they just wind up complaining, right? Ah man, damn, market structure, shit, fuck forex, it's a scam. But in truth, they just don't have the in-depth understanding. Now, lo and behold, we did, me and my boys in the mentorship did talk about this in the mentorship, right? So we did have price pushing bullish in this intermediary trend. Notice intermediary trend. That's a note, right? Intermediary trend. But the overall trend was bearish. That didn't change. So with this intermediary push bullish, we did have this change of character here, right? Price came, failed to make a high, broke lower again, made that final test. Lo and behold, there were the entries, and we did take very good bearish entries in here. And I remember I did do a breakdown of this. I'm not sure if it's on the YouTube or my Instagram. I'm not really sure. And of course, make sure you follow me on Instagram at Howitt's, because I'm very active there. A lot of recent and most up-to-date things are posted there, rather than this hindsight, which is basically for the YouTube and etc. So if you do want to see the really cool and up-to-date stuff, make sure you do follow me on Instagram at Howitt's, and it is what it is, right? So let's continue with the video now. So after these breaks, we managed to catch some sales in here and off of this wick too, because we do know that it did come to grab this liquidity. But overall protection was above this high, because this was the protected high, and some really good sales in here. My boys did catch some very, very good and crazy RRs in here. Well, this right here was the overall liquidity run anticipation, right, which was broken in the early this week. So it is what it is, guys. But mainly I did want to talk about these trades that I did manage to catch myself today. So I was looking at this was me looking at the 15 minutes time frame on EURUSD, where I did see some really cool stuff, right? So we did have this this trend being put into place, right? This downtrend. So we had the high, we did have this low and then this high. So with the break of this low and the formation of this lower low, I was now looking at potential supply areas where that pullback was going to go to, and then catch the sell off of that area. Lo and behold, that was the supply zone that was just hanging around there waiting to be mitigated, right? So boom, so price reached here. We wait for the same and everyday MMC footprint confirmations. So we did have this break of structure, this retest, entries in there, and this was the overall liquidity run. So this was like 11 a.m. in the morning, the London Open, and also during the New York session, right? Because we did have the London session pushing this market bearish, breaking this structure here, and then this pullback during the New York Open, leaving us that pretty good entry there at the wick. Lo and behold, price did take the buy stop liquidity resting below these lows here, and it is what it is, guys. So I do hope you really enjoyed the video, and if you did, don't forget to hit that like, subscribe if you haven't, turn that bell button on, and of course, guys, if you are into that premium level of knowledge, and you know, like being able to anticipate the market moves as we do, you could kindly DM us on Instagram at official Green Pips FX, and you know, we'll be happy to receive you and become a member of our MMC footprint trading community. With that being said, guys, we also do recommend two of the top brokers in the industry, which is Deriv for synthetics and just Forex for currencies, with the links in the description. And with that being said, until the next one, guys.